Hi, I'm Tom Elliott and welcome to another financial market update for Hodges Real Estate. Well, the Reserve Bank has just delivered its verdict on interest rates for another month at least. And the good news is that rates are on hold at 3.5%. Now, pretty much no one expected the Reserve Bank to cut rates at the moment, even though I and many others do think that Australian interest rates are far too high. And that is one of the various reasons why the Australian dollar is still very, very strong on world exchanges. Currently, it's almost 106 US cents. However, the reason the Reserve Bank will not cut rates anytime soon is that it wants to keep its powder dry just in case the world markets tip over again. That way, if the Australian economy needs a dose of confidence, the Reserve Bank can step in and cut rates further. Now, Harvey Norman has recently upgraded, or probably downgraded is a better word, for its full year profit. Full year profit will be down almost 40% this year compared to last year. And in fact, like for like sales growth at stores was actually down around 6.5% for the year. JB Hi-Fi and other retailers have seen their share prices fall as a result. Now, I can understand why Australian consumers don't want to spend money. A lot of people are spending, but they're doing it on the internet. They're taking advantage of the strong dollar. Others are saying, you know what, maybe the jobless rate is okay in this country, but I'm still a bit nervous about losing my job. There's so many dire predictions about what's going on out there. Anecdotally, people who work in the banking industry tells me that more and more customers are coming in and inquiring about term deposits than they are about credit cards. And that tells you that people want to save money, not spend it. Now, in China, the economy is definitely starting to slow down. We know that the official economic growth figure is now 7.6%. That's bang on what the market expects, but a year or so ago, the Chinese economy was growing at over 10%. In fact, at one stage, it was growing 12% per annum, so it is slowing. In the United States, I was there just a few months ago. The jobless rate is coming down slowly. It peaked at almost 10% in the US. Right now, it's just over 8%. Europe, of course, is still a basket case. Now, European Central Bank Chief Mario Draghi came out just over a week ago and said that he and the European Central Bank would do whatever it took, they were his exact words, to preserve the euro. Now, there is a plan being hatched, I'm led to believe, that is to allow the central bank to start directly funding governments. However, the Germans, as always, stand in the way. They do not want to see the printing of money to fund government deficits. I think Europe, whatever happens, is going to stay in recession for quite some time. So I mentioned the Australian dollar. It is very, very, very strong. It surprises me now because our interest rates have been coming down, notwithstanding the fact that the Reserve Bank has stayed on hold in early August. What is interesting is that quite a number of other governments around the world, including, for example, the Swiss government, are starting to hold Australian dollars as assets. And what they're saying is that the Australian dollar, being we are a pretty well-run economy with, by their estimation, quite a decent government. We might not see it that way ourselves, but compared to governments in most other parts of the world, ours actually looks pretty good. As a result, other governments look at our dollar and say, that's the sort of asset we want to hold. So that means everybody's got to get used to what it means. Does it mean that local manufacturing is going to stay under pressure? The answer is yes. So as always, what does this mean for the local property market? Well, the reported clearance rate over the past month has hovered above and below 60%. Which is not a sign of a weak market, nor is it a sign of a strong market. Interest rates, as I said, you won't see them coming down. Really, the property market at the moment is just suffering from a bit of lack of confidence. The same reason that people don't want to go and spend money in the shops also stops them from buying properties. To be honest, I don't think it would matter whether the Reserve Bank cut interest rates by 1/4 or 0.5%. People have got to feel confident about the future. Anyway, that's another financial market update for Hodges Real Estate. I'm Tom Elliott and I look forward to your company again, same time next month.